Alright, we're back for our weekly outlook, and last week we didn't do one, but this week we are doing one. So we're looking at the daily chart. As you can see here, we've got a couple of PD arrays marked out. So this is the daily volume balance that we used from September 11th to 12th. We made a retracement into that. I want to see this be protected in the event of bullish price delivery. So this should not be returned into if we're bullish. This is our order block high. Now, a lot of people always ask, when do we use the bodies? When do we use the wicks? Do we use just one? Well, on a daily chart, I would place more emphasis on the wicks and the bodies, but also the wicks, because you're going to get a decent reaction on the 1 minute when you're running into a high of an order block that's on the daily chart. Now, if you're looking at a 1 minute chart, am I going to always pronounce these so much? I'll probably refer to the bodies more. But if we have candles with thin bodies or small bodies and large wicks, then I will use the wick, especially if we're on a higher time frame, because it will be useful on a lower time frame like the 1 minute, the 5 minute, the 15 minute, to see how price reacts at this level, and if it performs any more sensitively than the body may. Okay, and then using the new methodology that ICT's been referring to. Well, it's not new, but it's a new application. It's to grade any premium wick when we're in all-time high environments. And what that basically means is we're in all-time highs right now. There is no higher price point on the Nasdaq than there is at this current moment in time. So any premium wick, and a premium wick is just a wick on the top of the candle, literally just like that. So this is a premium wick, and this one will be the discount wick. That will be a premium wick, that will be a discount wick, that's a premium wick, that's a discount wick for that candle. So this is the premium wick of the September 18th daily candle. We want to grade that. Now when I'm grading it, I'm putting a 1, a 0.75, a 0.5, a 0.25, and a 0. And those levels can be used as reference points on the lower time frames. Okay, now on the 4 hour, see we've still got that daily volume balance. I do not want this to be returned to at all. In fact, I want to see us not even trade into this fair value gap. So this is the daily fair value gap. I want to stay above this and treat it as a breakaway gap. Now, that could be done in the form of that, where we don't trade past the consequent encroachment level. We can potentially wick into it and then reject again, but my ideal scenario involves not even trading into the order block high. The ideal scenario for me here, for the coming week, is to use these wick levels and to use this area of price. Now this is a balanced price range. What makes this balanced? Well, it's consolidation. So this little area, drawing it very roughly, we should, or we could, potentially run back into this, and then I would like to see that support price higher. It should take something more significant to run through this, and if it does run through it, I'm not anticipating that being the top of the market now. I would anticipate another run back above. So to run below this would require something significant. Now, what would be a significant price run? One that is initiated with a news event. So an 8:30 high impact news driver, a 10 a.m. high impact news driver, 2 p.m. high impact news driver, something that comes out and it's got a significant impact on the market and it causes increasing velocity in price. That would be what I would expect to trade below here. But I'm bullish, and I don't think any significant price run should take us lower. Any significant price run, in my opinion, should only keep delivering us higher. So say we get on Monday, we just trade lower towards this area of bounce price, then with a significant run higher caused by a news event or a market open, I would expect something to deliver us back towards our all-time highs. Then I want to be using these wick levels. So these are the daily, this is the daily premium wick of September 18th, which we just highlighted earlier. On the lower time frame, which we'll go to in a second, we want to see these used as areas of reference. We're not using them directly as support and resistance levels, where we just buy on one and sell on the other, but we are using them as algorithmic reference points. Now that we're on the 1 hour time frame, I just want to look at the order block first. Now, we're on a 1 hour time frame now, so we've got a bit more of a zoomed in perspective. And you can see that this order block is now something else. So it's still a type of order block, but the specific PD array that it is now is a breaker block, because we've got this low, this high, this lower low, and then this higher high. So that makes this a breaker. We did return into the breaker after we made the high high, and this PD array now, it was also used there, or used in terms of an algorithmic signal, because it failed to even reach into the breaker, so that becomes a sign of strength. I don't want to see price trade back into this order block high or breaker block high. Remember, a breaker block is still a form of order block, so it's not incorrect to refer to it as an order block. I don't even want to see us trade back into this. I want to see the bounce price range used to take us higher. Now, if it does trade back into this, does that negate everything that we've spoke about? No, we can still see it, wick down here, even go down here, and then with the daily candle, I don't want any bodies closing past the order block high or the breaker block high. So picture a daily candle in your mind. This is a 1 hour chart, but picture a daily candle. I wouldn't like to see anybody close in or below the order block high. A wick of a daily candle, a discount wick, can close here. That's fine. Also, it can wick down here. But as long as the close of that body is above the order block high, I would be happy with that to look for higher prices. Just to show you what that could potentially look like on a daily chart. Say the body opens up, if this is a bearish candle or a bullish candle, regardless. Say we open up, we trade lower, and we close up here, or we close up there, and we leave this wick down below the order block high. That is a perfectly acceptable scenario, and I would still like bullish prices after that. But if a body closes below it, that wouldn't fill me with a huge amount of confidence. I would want to see something, reframed on the lower time frame to then go in and look for longs. So I would want to see some kind of bullish market structure form if we close below the order block high. Obviously, we still have this supporting fair value gap, but say we're on the 1 hour chart and we close down here on the daily, and it's possible we do have a cluster of new day opening gaps. That's why they are here. Then I would want to see something, again, form like inverting this breaker block, going above it, a bullish market structure shift, a turtle stoop setup, an SMT on the higher time frame. A couple things could happen, and that would deem it acceptable to look for high prices again. But because we're in an all-time high market, I don't want to be taking a lot of sell trades. That shouldn't be what I'm mainly doing. I can go against the grain and take sell trades, but I'm not going to be using those for high time frame objectives. I'm not looking for huge amounts of distribution to the sell side, just because we're in an all-time high market. Regardless of whether you think this should trade into a cluster of new day opening gaps, which I don't think it should, or whether it should trade into the order block high, which is a bit more reasonable, I would want it, or I would say that you really shouldn't be looking for a huge amount of sell trades. You want to really mainly be positioning yourself on the long side, especially in an all-time high market, because, and I've been mentioning this in the Discord for like the last 2 weeks, in an all-time high market, no one's going to be able to pick the top, regardless of what they can tell you on Twitter. It's just not a possible thing to do. It'll keep making all-time highs, it'll keep making all-time highs, and it'll put in a high, it'll trade lower, and then it'll put in another high, trade lower, put in another high. You really don't know when that's going to end until something big happens that really just forces the market lower, like some really good news for the dollar. Okay, back to the daily chart. I want to be a bit more specific on how I see this week happening. So here is our economic calendar on Monday. Oh, sorry, for the entire week. On Monday, we don't have any high impact. We do have this little speech, but it doesn't really put it doesn't really put a dent into our plans. It's not going to be a consolidation day, I don't think. There'll be a couple, maybe one main sustained price run at market open or during the London session. But yeah, I want to be trading on Monday. I'm not going to ignore Monday this week. Tuesday, we've got PMI or flash manufacturing, and then we've also got Powell speaking at 12:35. So tread with a bit more caution on Tuesday. Make sure you're not taking any sells or longs prematurely at market open. Wednesday, we've got new home sales. This is an important one for the economy, but it doesn't really have a huge factor or a huge volatility spike um, on anything. Thursday, we've got a lot of stuff on 8:30. Mainly the unemployment claims will be the main driver here. So that's a good day to be trading. Friday will also be a good day to be trading because we've got core price index. So I'm expecting a large distribution week, and that's not to say it's going to only expand one way, but there should be a lot of fast and high-paced price runs. Monday, again, I'm not looking at this as a consolidation day. I want to see something form. I'm not saying I'm going to take day trades, but it's not a low probability day for me. So as ICT has been highlighting in the recent videos with trading all-time highs, he said that we're likely to overshoot the closing price on the daily candles with the next candle, and then it should overshoot it a little bit, go into the premium wick levels, and then you can see these used as reference points to potentially send price higher. Now that's pretty much daily power of 3 or classic buy-sell days, but from a daily settlement perspective rather than the midnight perspective. If you don't know what that means, just don't worry about it. Basically, what you want to see is a Judah swing below the daily range, and then trade into an area of support, being one of these wick levels, and then use that to go higher. Now, ideally, Monday shouldn't trade below the 0.5 level of the consequent encroachment here. I think the most realistic thing to happen is that we don't really even trade past the upper quadrant by a huge amount. So going into London or the New York AM session, I want to see the 0.75 quadrant used on Monday for an area of support, or the high of this wick being that one level, and then we can see higher prices from there. I'm going to refrain from giving a huge prediction for the rest of the week because it really just depends on how Monday plays out. And I'll keep you updated in Discord in the daily analysis. The roundtable is going to launch this week. That's the private mentorship tier. Nothing in the free tier is going to change, except for daily analysis is going to be a little bit more vague, so that I can retain some thunder for the private mentorship. And then the weekly outlooks are going to be a lot more detailed on or inside of the roundtable, which will be coming out on Tuesday. Okay, so hopefully you've come away with something. I know a lot of people have been looking at ICT's new lectures, and I think they're really good for trading all-time high conditions. But hopefully you've learned something from this video. I'll see you in the next one. Goodbye.